Welcome back. Some very interesting dynamics are happening right now in our US housing market. So for example, the number of people listing their house for sale has been decreasing on a year-over-year basis for more than a year. This has led to a giant decrease in the amount of houses for sale as home buyers are being hit by a triple whammy: high home prices, high mortgage rates, and low inventory levels. To say our housing market is very unique is an understatement. So in today's video, I'm going to share the latest trends we're seeing right now regarding home prices, inventory levels, the number of price reductions, and much, much more. This will give us some indication of what lies ahead with the US housing market. Also, stay tuned toward the end of this video because I'm going to provide some kind of a summary regarding our housing market over the past several weeks here, and also some predictions as well. Before we get started, if you guys are new here, I invite you to subscribe to this channel right now because I post frequent housing market updates so you guys can make a more informed decision about whether to buy or sell a house right now. And if you guys are already subscribed, then thank you so much for joining me in today's video. I appreciate you. So let's begin today's video. This is based on my weekly video I make regarding my own analysis of Realtor.com's data. They announced their weekly update on September 7th, which, like my previous videos, I did not even read because I'm a nerd. Instead, go to realtor.com/research/data. You can click on this link right there, and it takes you more or less to this fun spreadsheet here. I've kind of color-coded it so I can provide my analysis here. Anyways, I digress. Let's talk about asking prices in the US. These trends, all these stats I'm sharing in today's video is based on year-over-year changes. So when looking at asking prices on a national level, asking prices only increased by 0.2%. So for the past 2 weeks here, asking prices have been relatively flat compared to the previous year. Before that, we actually had 4 consecutive months of increases. And before that, we actually had, 6 consecutive weeks of decreases. Quite the volatility in our housing market ever since mid-June this year. So as I note right there, the limited amount of houses for sale is minimizing the drops in home prices. So because we have historically low level in the number of houses for sale, that's limiting decreases in prices this year. The key question though, will that change given the recent rise in rates? So average 30-year fixed mortgage rates have been above 7% ever since late July this year. In my opinion, this is going to depend on the balance between demand and supply. On the demand side, of course, demand is down because we have record low housing affordability due to high home prices, and of course, due to elevated rates as well. On the supply side, though, we're also seeing a decrease of new listings because rates are so high right now. A lot of people have rates less than 4% and 5%, some people with rates less than 3%, and therefore, they don't have a lot of motivation to sell their houses, and that's actually causing, the increase in rates is actually causing a decrease of new listings, which of course is what I talk about on the channel for quite some time now. Let's also talk about inventory levels. So inventory levels compared to the previous year have now been down for 11 consecutive weeks. Last week, it fell by 5.2%. It appears this decrease of housing inventory is really due to the fact mainly from a lack of new supply hitting the market or a lack of new listings. That's number one. But also number two is that inventory was skyrocketing at this time last year, which is causing inventory to be down compared to last year. This is because inventory is only up slightly year to date this year, whereas last year inventory was up greatly, which I'll share with you guys actually right now here. So I want to look at inventory levels according to altosresearch.com. So for the week ended September 2nd last year, there was around 552,000 homes for sale. In the week ended September 1st, though, we had around 509,000. This means we have approximately 44,000 fewer homes for sale nationwide compared to 12 months ago. That represents an 8% decrease, which is night and day difference compared to the 76% gain on a year-over-year basis that we saw in late February this year compared to late February last year. So how wild is that? A 75% increase in late February. Now we're down by 8%. So check this out. This is pretty wild. When looking at inventory growth year to date this year compared to the same time frame last year, it is night and day difference here. So we only have 38,000 more homes for sale right now compared to the start this year. So year to date up by about 8%. Compared to last year though, we saw a gain of 260,000 more homes for sale compared to the start last year. That was an 89% gain of inventory levels last year, compared to only 8% this year. Inventory has been increasing very slowly ever since April, which I'll share with you guys here in a little bit. This is mainly due to seasonality, but also because inventory was increasing greatly at this time last year. Now, having said that, inventory levels tend to peak in around August, but right now, based on trends from altosresearch.com and other sources as well, inventory levels is still increasing, which is a little bit unusual here. Supply is still rising due to houses taking longer to sell, not due to a giant increase of new listings. So just kind of think of it like this. If we have a low amount of demand, that would imply we're going to see fewer contracts being signed, and therefore houses are going to take longer to sell. And that in fact causes inventory to actually increase like it actually did last year. Also, something worth noting as well is that we have 8% fewer homes for sale nationwide compared to 12 months ago, but we're still down by about 50% compared to pre-COVID levels back in 2019. This means we're missing approximately 460,000 homes for sale compared to the same week of 2019. This is exactly what I mean by this. Here's altosresearch.com, a really good website to look at trends on a national level, but also they provide some insights regarding at the city level as well. But on a national level, again, we have around 509,000. 1 year ago, around 552,000. The levels right now at around, let's just call it 510,000, is slightly higher compared to 2021, but still below 2020, but also well below 2019, as well as 2018 as well. Of course, like I mentioned at the very beginning of this video here, one of the main reasons why inventory levels remain at very low levels, historically speaking, of course, is that new listings have been decreasing. In fact, new listings have decreased for 61 consecutive weeks on a year-over-year basis, dating back to early July of 2022. This, of course, is causing inventory to remain at very low levels. Something worth noting here is that over the previous 4 weeks now, we've been seeing single-digit decreases of new listings on a year-over-year basis. Before that, we actually had 16 consecutive weeks of double-digit declines. So therefore, it appears new listings were falling much faster last year due to this sharp rise in rates. What I mean by that is back in January 2022, average rates were around 3%, but by the time we hit late October, they were over 7%. This caused a shock in our housing market, and that's one of the main reasons why new listings were absolutely plummeting during the second half last year. Let's also talk about how fast or how slow houses are selling nationwide. So last week, it took about 2 days longer to sell a home compared to the same time frame in 2022. This also marks the 57th consecutive week in which houses are taking longer to sell compared to last year's levels. Again, though, a friendly reminder, days in the market is a measure of the time frame when you list your home for sale to when you accept an offer from home buyer. But days in the market is not recorded until the house actually closes or the sale is finalized here. So therefore, days on the market or any other metric that has to do with a closed home sale is a lagging indication of our U.S. housing market, approximately 1 and 2 months ago when the home seller accepted the offer from the home buyer. One thing to note though is that the difference between this year and last year has actually been getting more narrow. So for example, back in June, it was taking around 12 to 13 days longer to sell a house compared to the same time frame in 2022. Now it's only a difference of 2 days. Therefore, in my personal opinion, this difference between this year and last year is implying the market was slowing much faster last year than this time this year. Okay, let's change gears slightly here and talk about the number of price reductions compared to a year ago. because last week it decreased by 22.2%. That marked the 14th consecutive week of decreases compared to triple-digit gains to start this year. So the number of price reductions was increasing by more than 100% to start the year. Now it's actually down for 14 consecutive weeks. In my opinion here, the reason why this has been negative ever since June is due to two main reasons. Number one, very limited inventory levels. In other words, fewer options for houses to buy by home buyers, which is causing home sellers to not reduce their asking prices as much as they did last year. That's number one. Number two, price drops skyrocketed last year. In contrast, the share of price drops is relatively flat year to date this year. So this is a look of the share of price drops according to altusresearch.com. So to start the year this year, the share was around 36%. And as of the week ended September 1st, it was also 36%. This is much different compared to what happened in 2022 though, because for the first week last year, it was around 23%. But by the time we hit this time last year, it increased to 40%. So the share of price drops more or less doubled year to date last year, whereas this year it's relatively flat. Now, having said that, the share right now at about 36% is still higher compared to 2021 and 2020, but it's more or less on par with pre-COVID levels in 2019 as well as 2018. I'm really curious to see if this is going to change though, because this rate here has been steadily increasing ever since really May this year. So it's going to be interesting to see if demand is going to fall enough to cause the number of price reductions to increase as well beyond pre-pandemic levels. Of course, time will tell, and I'll definitely keep you posted. All right, I know that was a lot to cover in today's video, so here's a summary for you guys, and then I'll provide some predictions and kind of some general summary regarding our housing market over the past several weeks here with you guys. Number one, asking prices nationwide have been flat over the past couple of weeks. The decrease in prices from a year earlier was very much short-lived due to the fact that prices fell much faster at this time last year. And low inventory levels is supporting home price growth this year. However, though, will that change given the fact that rates have increased to over 7%? I will definitely keep you posted regarding that. Number two, housing inventory decreased by 5% year over year last week compared to the same week 1 year ago. That marked the 11th consecutive weekly decrease. Inventory has barely increased this year, only up by about 38,000 more homes for sale compared to the start this year. When we compare that to last year, it is much different though, right? A gain of about 260,000 more homes for sale over that same time frame. Also, new listings have been decreasing year over year for 61 consecutive weeks. This continued lack of new supply hitting the market is causing inventory to stay at very low levels, down by about 50% compared to 2019. Number three, average 30-year fixed mortgage rates were around 7.1% for the entire month of August, according to Freddie Mac. 1 year ago, it was at 5.2%. In addition, average daily rates have not dipped below 7%, so they have been above 7% ever since late July this year, according to the Mortgage News Daily. Again, this is all for people with exceptional credit, by the way. Average rates for the best rate you can get nationwide. Number four, the share of price drops is roughly the same as the same week of 2018 and 19, but still much higher compared to 2020 and 2021. Number five, houses are taking longer to sell compared to 1 year ago, now for 57 consecutive weeks. So what are some potential huge changes ahead, given the fact that rates have been on the rise ever since really April this year? And again, a friendly disclaimer, I am not a real estate market fortune teller. Number one, average 30-year rates are about 1.2 percentage points higher today compared to 12 months ago. That equates to a 12% decrease in buyers' purchasing power. Of course, a lot of home buyers right now are facing a lot of headwinds, such as record low housing affordability, low inventory levels of existing houses, elevated rates, as well as a potential of a recession potentially next year. One thing's for certain though, there's a lot of uncertainty in the market here. I laugh, but it's a sad state of affairs really for home buyers. I really feel sorry for everyone who wants to buy a house, and you're seeing record low housing affordability, rates at 7%, highest rates we've had in like 20 years. It just appears the news is getting worse and worse and worse. I will tell you though, I'm just going off script here, but I'll tell you though, the stats I'm sharing in today's video are not sustainable. I've been talking about this for quite some time. You can't have home prices increase by 40% ever since 2020 and not expect some sort of correction or some sort of change regarding prices. So it'll get better, I promise you. But when that happens, all depends between the balance between supply and demand here. But I feel for you guys if you guys want to buy a house and you're feeling very frustrated. I totally get it. Totally off script, but I just want to throw that out there. I feel bad for everyone who wants to really buy a house, and it's just a challenging market. Anyways, all right, number 2. Housing affordability is a huge hurdle for home buyers, especially compared to the past couple of years. Like I mentioned, we have rates more than doubling ever since 2020. And of course, prices based on the median sold price is up by about 40% from 2020. Rates in general have been on the rise ever since April, more or less. And on a national level, home sold prices have increased by about 9% year to date based on my own analysis of Redfin's data. So therefore, we have rising rates and prices making housing affordability even worse than it was. This is not sustainable. In my opinion, we have seasonality and affordability constraints, which will put downward pressure on prices in the months ahead. Of course, it all depends on how many people decide to list their house for sale, the balance between supply and demand. Number 3, early signs of home buying demand. I try to make videos like that every week regarding some leading indicators of home buying demand to kind of gauge where we're headed here. But early signs of home buying demand have been absolutely all over the place due to the volatility in prices and of course due to the volatility in rates as well. The most recent stats show that applications for home loans to buy houses decreased by 28% year over year for the week ended September 1st, according to the MBA. The MBA's Purchase Index, which is an index which measures the amount of people submitting loan applications to buy houses, fell to a 28-year low, the lowest level since 1995. Also, Redfin's most recent data shows that pending home sales decreased by 13% year over year, and new listings decreased by 9%. So therefore, we have a low amount of supply meeting a low level of demand, making it feel like in some markets that our housing market is still competitive. Also, the National Association of Realtors reported on August 30th that pending home sales on a national level in July fell by 14% compared to July of 2022. However, like I mentioned, we have this dichotomy in our housing market where existing home sales, we have a low level of that. We also have a low level of the amount of houses for sale. But for brand new home construction, sales have been absolutely skyrocketing, even though supply is at high levels here. So as I note right here, new home construction sales, which is a measure of a contract being signed between a builder and a home buyer or a deposit taken by the home builder. That's the definition according to the U.S. Census Bureau. Those new home construction sales, really acting more like a pending home sale, surged by 24% this June, then increased by 32% this July compared to last July. So the resale market, we saw a decrease by 14% of contracts being signed, whereas new home construction surged by 32%. So it appears that builders are gaining an advantage due to rate buy downs and also due to anemic supply of existing houses for sale. Of course, how long will this last for, given the fact that rates have been over 7% for over a month now? It appears our market is highly rate dependent, of course, so the data coming in is ever changing. And of course, a friendly reminder, real estate is local, and the trends I'm sharing in today's video are national trends, which means that some markets are doing better and some markets are actually doing worse. Number 4, sellers and buyers have exited the market, leading to a dip of new listings and contracts being signed, especially compared to the past several years. The lack of new supply of existing houses since last summer has led to inventory remaining at historically low levels, down by about 50% from 2019. If homeowners continue to decide that now is not a good time to sell their houses, that will limit inventory levels. The direction of our U.S. housing market will depend, in my personal opinion, on unemployment levels, rates, inventory, and the balance between supply and demand. And number 5, this is probably the most important one. I appreciate you guys watching today's video, and of course for supporting my YouTube channel as well. If you guys got any value in this video whatsoever, then please share it on your social media. Of course, hit the like button as well. I appreciate that as well. I hope you guys have an awesome day, and look forward to seeing you on the next video.